Welcome to our first Liechtenstein Financial Services podcast. In the Liechtenstein Financial Services podcast, we will primarily explore the legal, regulatory and tax perspectives of banks, funds, asset managers and other participants in the Liechtenstein Financial Center, a production of PwC Liechtenstein. Today, we are discussing the attractiveness of Liechtenstein as a financial tech center. I am Patrick Wiech, your host, with 11 years of experience at PwC, specializing in auditing and consulting for banks and other financial service institutions. With this podcast, we aim to provide a concise overview of opportunities and challenges in selected areas. Our first podcast today focuses on tax topics, as there have been significant developments in this area recently. Joining us today is Martina Walt, an esteemed expert in international taxes and the head of our PwC office in Rogel. Martina, can you tell us a bit of yourself and your connection to Liechtenstein?
Thank you for having me on the podcast. I'm an international partner at PwC in the International Tax Division and have been advising international corporations, families and individuals on tax matters for over 20 years. I have two connections to Liechtenstein. Firstly, I lead the PwC Liechtenstein tax team and am responsible for our office in Rogel. Second, I grew up in the St. Gallen Rhine Valley near Liechtenstein and live in the region.
Thanks, Martina. From your perspective, what are the main reasons that make Liechtenstein an attractive location for financial services, businesses and investors?
Liechtenstein is unique in many ways. It is a constitutional hereditary monarchy based on democratic parliamentary principles. Additionally, it is an EEA member but not an EU member state and is closely connected to Switzerland through a customs union. This offers a highly stable environment from both the legal and regulatory perspective. This trust is reflected in the repeatedly confirmed AAA rating from Standard & Poor's, and the Moneyval assessment proves that compliance, trust and quality form the basis for success. Despite being one of the world's 10 smallest countries, Liechtenstein boasts world-leading industrial companies and a strong financial and associated service sector. The labor market benefits from proximity to Switzerland, Austria and Germany, providing highly skilled workers familiar with the financial market and wealth management sectors. The financial market is highly diversified and internationally connected through the EU and Swiss passports for funds and other vehicles. Then, the legal framework for companies, trusts and foundations is modern and flexible, offering numerous legal forms including trusts, foundations and the establishment. This provides tailored asset protection and succession solutions under local and international law. An attractive, internationally compatible tax system rounds off the attractiveness of the location.
Thanks, Martina. Can you highlight some of the recent changes in Liechtenstein's tax law and that affect businesses and individuals? And in your opinion, what impact do these changes have on the tax landscape in Liechtenstein?
So the last major tax reform was back in 2011, when the foundation for a European compliant tax law was implemented. The changes coming into force on January 1st, 2025 are mainly clarifications in the area of the dedication tax or real estate capital gains tax relevant for individuals. For businesses, there are adjustments regarding transfer pricing corrections, the expansion of permanent establishment definition for dependent agents, as well as clarifications on loss offsetting rules. Additionally, the basis for public country-by-country reporting was established, and there were changes in tax transparency, such as the Automatic Information Exchange, FATCA and other international standards. So Liechtenstein is continuously expanding its network of double tax treaties with Croatia, Belgium, Ireland and Italy in the pipeline of next treaties.
Interesting to hear, Martina. And how has the tax environment in Liechtenstein developed in recent years, particularly concerning regulation and adoption of international tax standards?
While transparency and international regulatory compliance are clear priorities, already since 2009, Liechtenstein financial and tax sector has pursued a strategy of full compatibility with transparency and tax cooperation. Liechtenstein was actually one of the first countries to introduce International Information Exchange and FATCA, and since then, the transparency framework has been continuously expanded to meet all international standards. Liechtenstein also has implemented aspects of the OECD base erosion and profit shifting, the BEPS agreement, and introduced the OECD Global Minimum Tax, also known as the Pillar 2, last year on January 1st, 2024. Therefore, nowadays, resident ultimate parent entities and investment vehicles, as well as local country companies of large groups, have to consider the international top-up tax of the 15%. Last to comment on is that the existing country-by-country reporting of tax data will also become a public CBCR in Liechtenstein, but only once the EEA Council has approved.
Let's talk about a bit more about the global minimum tax OECD Pillar 2. And Martina, can you explain the concept of the global minimum tax OECD Pillar 2 in Liechtenstein and how it differs from other tax models?
The OECD Global Minimum Tax aims to set an international minimum standard and ensures that tax competition for large corporate groups is limited to a minimum of 15%. It is actually the most complex set of rules we have ever seen in the tax law globally. A minimum tax is levied through the local and the international top-up tax, also called QDMTT, Qualified Domestic Top-up Tax, and IAR, Income Inclusion Rule. If both mechanisms do not apply, the concept allows for the top-up tax to be levied by other group companies through sister or parent companies, the so-called UTPR. The latter aspect raises certain treaty and constitutional validity questions and leads to fundamental global discussions. The UTPR element of the minimum tax has not been established and implemented in Liechtenstein yet to date. So yes, the impact is going to be quite significant.
Let us look into the future. And Martina, what future trends or changes do you expect in Liechtenstein's tax law that companies and taxpayers should consider?
Tax transparency and information exchange will remain highly relevant topics. I would say Liechtenstein will also continue to follow clearly the international compatibility, but also systematically expands protection through double tax treaties. In what form or aspects like global wealth taxes for private individuals might become relevant will first need to be seen on an international level. However, I think what I'm pretty sure to say is that Liechtenstein will certainly strive to remain attractive as possible on all the international rules.
Perfect. Thanks so much, Martina, for your insights in the tax world in Liechtenstein. I hope you had a few interesting things to take away from this podcast, and we're looking forward to hear you again back in our next podcasts together.
Thank you very much.
In summary, Liechtenstein has clearly positioned itself as a premier financial hub by aligning its tax and regulatory frameworks with international standards. The country's commitment to transparency, compliance with international regulations, and a strategic extension of double tax treaties enhance its appeal. For private wealth investment, Liechtenstein offers a robust banking environment and attractive fund and legal vehicle structures. Liechtenstein, indeed a hidden gem on the global stage. From this basis, we will dive into new topics such as legal, regulatory and other topics in future episodes. So stay tuned for our upcoming episodes. In the meantime, contact us for a personal exchange how Liechtenstein can fit into your agenda.